please. Yeah, but our candles are getting smaller towards the high. Anything else which literally, and I'm going to do some thorough testing, but I think this occurs whenever this type of how can I pull it without giving it away? Okay, whenever this type of setup occurs before an important news, that tells you that the smart money managers know something that majority of others don't. So we want to trade accordingly, right? Right? Because people are getting involved in that in the market. So what were the telltale signs here? Okay, I'll tell you guys, and I'll write this down here. And this is so important. You know, if you learn anything going forwards, if you have this in your arsenal, this will assist and help your trading literally exponentially. So whenever there is an important economic data, news, look for this is, you know, this is exactly what Chris identified here for this setup, I presume. I know everyone's saying, "Oh, I knew this." Yep, you do. You know, everyone knows this, but now it's just about implementing this and keeping your eye out. So whenever there's an important economic data news, look for divergence on a larger time frame. You know, I know, you know, some guys that are making fortunes will literally do this. I swear, will do this. They will do this, guys. And if you write this down, if you start doing this, boy, you'll see phenomenal returns. They do this, and this is it's incredible. What they do is just give me a second here. Yeah, daily, weekly's predominant. Very profound there, Roland. Daily, weekly, 8-hour daily, weekly, very strong. Because that's actually telling you that the longer term time frame traders are involved in this market. And if the longer term time frame traders are involved in the market, then they'll be looking at some form of their, you know, they're not looking at holding positions for, you know, for 1 hour, 2 hours. You know, you notice with a lot of, you know, even an automated system that will just be, you know, pulling out 4, 5, 6 trades a day and going against each other sometimes and providing conflict, and you know, but most of the trades will hold for 2, 3 days sometimes, and generally, you know, sometimes the positions could be in a big loss, but it's also related to the risk, so it's so important. But then, you know, no matter what, it generally ends in a nice profit. It's quite phenomenal. But what I'm trying to say here is just try this test, okay? Just try this test going forward tomorrow, or let's say start on Monday. Maybe just do like a new, it's not a new trading plan, but let's just say, a fundamental plus technical trading setup, where number one, you pull up your daily FX economic data. So you pull up your daily FX economic data. So what I mean by that is you pull up the chart. So let's do this together. So what happens here is it's incredible the euro yen. Just a very quick one here. Sorry about that. But the euro yen really pushed up after the news about the interest rates were kept unstable, and then we heard lovely Mr. Draghi came out, started talking about the markets, saying it's a steady pace, and then we saw a nice push up to the upside. Then we had the ISM manufacturing came out, worse than expected. Then a huge sell-off to the downside. So, I was in 3 or 4 positions on different markets, and you're just really, it's like it just lifts you up and just swings you around. So you need to be, as a trader, you need to be very composed. You need to be confident in your plan, because if you're not, you would have literally, if you were in a short position here, market move, let's say you had a nice large stop, for example, related to the risk, good risk management, and market moved against you, you probably would say, oh, this market's really bad. You cut the trade, then you see how the market sold. Also, what's so important is when the market is very volatile during these setups plays, you need to make sure your risk parameters are intact. Yeah, so generally, Bola, good question. Bola, said, how do you trade this? Well, 2 ways. Number one, you don't trade. If there's so much news coming out and you don't really have a large account size, it's generally the guys that have a large account size, and I'm not talking about large institution account size, but let's just say for a private trader that has like 50 grand, $50,000, let's just say minimum, 30, 40, $50,000 minimum. They can afford to say, you know what, I'm gonna have, let's just say, 3 lots. I'm going to have 3 lots in this trade, and I'm looking at the bigger time frame, and I feel that this market's really weak, and I'm going to have a 300 pip stop, and I'm going to let the trade run. And I'll do the same thing on all of the different markets. So they are willing, they're capable of withstanding all of the volatility in the market. But if you don't, if you're only trading with £200, £1,000, £5,000, euros, dollars, then you have to really be, minimum trading lower size of 10 cents. And 10 cents, you still really need to be having at least $2,000 roughly to withstand this type of big moves. And the reason why is because if you're in one trade and you have $500, then it's fine. You can probably have enough as a stop, but you will not be able to diversify. The key thing I realized about trading is the importance, and every day that goes by, it amazes me that the importance of diversifying. And what I mean by that is, if you're just trading, this is where a lot of traders go wrong. And I know a lot of traders that will just enter one position. So they're focused on a trade and they said, yep, I'm going to go long the euro yen, for example. So I've entered my trade long the euro yen based on, whatever your setup plays, trend line, bullish divergence setup, whatever it may be. Okay, candlestick reversal, hammer. And then you just say to yourself, okay, I'm going long in this position, and I have my stop below here, and I want it to move in my direction. That's all good and well. You've done well. You've prepared well. You looked at the economic data. You followed your plan technically, which is great. This is what we've covered. This is fantastic. And I see it more every single day in the market. If you just only enter one position and you're trading on the euro yen long, let's just say, and then, for example, let's just pull this up here. For example, you then are also trading. You're then also trading the euro dollar. So you're trading the euro dollar also to the upside.